Welcome to the latest Motley Fool Scoreboard. I'm on in Chockville, and we've got longtime fools Dan Caplinger and Toby Bordelon giving a 1 to 10 rating to Braces Disruptor, Align Technology, ticker symbol ALGN. Talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you have 7s, Toby.
Yeah, this is a device maker for the orthodontics and dentistry industries. They produce their Invisalign alternative to braces system, their digital imaging systems. Yeah, 7's good for me. They're the market leader in the industry here in terms of the Invisalign system. Strong and consistent performer. The biggest problem I see is that competition is more intense than it once was, though one of their big competitors went bankrupt recently. Even though I put Align at the top, I think there are some more affordable competitors out there trying to get a price in the market. We're starting to see the expiration of some patents too, which reduce their competitive advantage. And this is discretionary spending, a lot of this orthodontics. So in the short term, maybe you have some economic pressures, but overall, I like what I see.
I'm a parent of someone who was a teenager who took advantage of this product. I think if you ask them whether that was a discretionary purchase or not, they might have a different view than the average cash-strapped parent. But nevertheless, I like Align. They are a market leader. It's an important niche in the healthcare environment. The question of whether to go with Invisalign over conventional braces, it's something that, like I said, most parents have had to deal with. Agreed, there's more competition now, but the brand is strong. I think the brand means something, especially in healthcare, where it's easy to kind of feel like if you do too much, go down too far in the bargain basement, you risk giving up quality that can come out with bad patient outcomes. Nobody wants to put their kid through the trials and tribulations of orthodontic treatment only to have a failed result. And so I think Invisalign and Align can take advantage of that.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Dan's at a 6. Toby, you're at a 7.
Yeah, this is a solid team here with a history of success. I knock them a little bit because I'm starting to wonder whether this is the team to take the company into the next era. But CEO Joseph Hogan's been with the company since 2015. Stock is up big during his tenure. It's also fallen sharply during his tenure as well. So, you take the good with the bad. But CFO John Morici has been with her in his role since 2016. Management team is fine. I'll give them the benefit of the doubt given their past success, but I don't think their recent performance is anything to get super excited about.
I think Toby and I agree wholeheartedly, and the only difference is what score that merits in both of our systems. There's just nothing that much to get excited about lately. They've done a perfectly reasonable job. It's just not really clear how the pathway towards renewed growth is going to materialize, and I don't see like really strong leadership kind of pushing in that direction. They're saying the normal things. It's just not translating into obvious action that has investors excited about the immediate future.
For financials, a 10 is a fortress, a 1 is yikes. Dan, you're 1 lower than Toby. You've got a 7.
7's pretty good. They've got a solid business. They've got their outstanding share count has been coming down. I like to see that. Some concerns, I think their operating expenses remain too high given some of the stagnation in sales lately. Also, where'd those superior net margins go? Is that just a matter of competition coming in? Is it loss of pricing power? I really would like Align to reassert that pricing power, get that kind of premium brand ability to keep sales prices high and still have demand be materially stronger than it has been recently. If they do that, then I'll boost my financial score.
Yeah, I went with an 8 here. I like the balance sheet. No long-term debt, over $1 billion in cash. Inventory levels are looking good. One thing that stood out at me as I was looking at this, as high as the cash balance is, deferred revenue on the balance sheet is even higher right now. So while they're not spending their money faster than they collect it, you might say they're spending it faster than they make it on a GAAP basis, which is kind of interesting. But revenue is still growing, more so than in the past, but it's still growing. Net income is coming down a little bit, ton of cash flow. Shipments of those cases are trending down over the past few quarters, but we're still above where we were in the last fiscal year. So, that's good. I think overall, a solid financial situation, no huge concerns when I look at this.
If you listen closely, you notice that Dan wants Align to raise their prices now that his daughter's past the braces stage. You know, and
Exactly,
plenty of time for my
exactly.
kids to pay that and boost your margins. Let's move on to valuation. Toby, how well will Align stock do over the next 5 years? How safe is it? Keeping in mind, 10 is a sure thing, a 1 is a lottery ticket.
I went with 5 to 10% returns. I don't think it'll take much to get a nice run in the stock from where we are, but I'm not expecting to see substantial market-beating returns in the near term here. Safety score 8. This is a solid business with a good reputation among practitioners, and they should keep making money, even if the growth is going to be slower than investors might like.
Yeah, I'm optimistic on this score. I gave him 5 to 10% as well. I think it's going to be at the high end of that. Stock's gotten hammered, and I think that it doesn't have to get back to its all-time highs anytime particularly quickly in order to still get a reasonable return for investors who jump in now. Safety score matching Toby's. I all have an 8 as well. I just don't see the stock having much room to fall much further, and I don't see the core business losing demand. I think there's built-in demand for the product. It's just a matter of not doing anything to make too big of a mistake. I don't think the company's going to make that mistake.
Move on to everyone's favorite topic. Toby, is there a company in Align space that you like better?
Not really. I mean, you look out there at what's going on in the space. Straumann Group is an interesting alternative, but I still think I like Align better. They're just more dominant right now.
Yeah, I don't really see too much in the way of direct competition. So really the question becomes how far out in healthcare and medical device technology do you want to go? I'll just mention Intuitive Surgical, ticker ISRG. I like robotic surgery right now. It's a good place to be. It has some hype going for it, and there's plenty of room for technological advancement in that area. That might be something that some investors would prefer. Not necessarily a direct competitor to Align, though. And so, yeah, Align looks pretty good in the space, in the niche where it is.
Thank you to both Dan and to Toby. They've given Align Technology a decent overall score of 6.8 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Sonos. Till then, Fool on. Pop, pop.